Securitas is looking interesting with its current move up. So this is the main count for the Securitas stock. Here we have a finished impulse in wave 1, correction with a WXY in wave 2, and now we are working on our wave 3 to way higher prices. So this fits nicely as an impulse, and the proportions in wave 2 fits nicely as well. And according to this, then, this is on a monthly chart. We are looking to finish wave 4, and then we are looking to finish wave 5, and then in turn finish wave 1 of a higher degree. And then we are looking for, wave 1, 2, and then 3, 4, 5, and so on. So this is very bullish count for Securitas on the monthly chart. An alternative to this is this one. This also count as a 5-way structure, but here we are counting this as a wave A. Here we have the previous 2 as a B instead, and now we are looking for a wave C. So what are the probabilities for this compared to this one? Well, it all has to do with context, and if we look at this now, so a common target for a wave C, so you can do it like this, you can see here, is this isn't a common, but it's a rare target, but nonetheless it is a target, and we exactly hit it. So the 61.8 taken from the origin of A to the low of B. But a more common target is the 1-to-1 ratio with wave A, or 123.6. Then we have 161.8, which also a pretty common target. It's more common with crypto than stocks, but stocks can reach it quite easily, I would say. So how do we know if it's a wave 3 or a wave C? Well, we don't really. But we can just focus on the movement. Is it going upwards or downwards? So this is looking for higher prices, and this is a rare target for AC, meaning that it is a higher probability that this is also looking for higher prices. And when we reach those higher prices, then we can take a look at if it is a wave 3 or a wave C. So in both cases, we're looking for higher prices. Basically, if this wave C isn't finished yet. But if it's finished, then we need basically an impulse down to go after lower prices. And I will show you why this isn't really probable. So this is more of a probable scenario, I would say, right now. And also a wave 3 has a tendency, or it's not a tendency really, it's almost required to break out of this channel, or the base channel. So if wave 3, if you look here at wave 3 in this scenario, to a base channel here, you can see clearly that wave 3 here broke out of the channel here. You see here, this is the breakout. And that is what we like to see here as well, to differentiate this from a wave C, which has a tendency to stick within a channel. So I can show you here, this, we will focus on this part now on the daily chart. And if we count this daily chart, this way I have labeled it as a wrong count. You can see here that if we count it that this is an impulse down, 1, 2. So I'm going to explain that we are talking about this part right now. This is the 1, 2, and so on. So this is the 1, 2, and then we are counted this as a wave 1 as well of a lower degree, and 2. But if we can look at this, then you can see that the time for this wave 2 compared to this wave 1 is over 1400, which is it's so rare, it's unheard of. So this is, I would say, 99% basically the wrong count. Here we have an impulse down. This is the bearish scenario. So this is assuming that we are done here and we are looking for much lower prices. So this is the bearish scenario. Here we have an impulse, wave 1, W, X, Y into a wave 2. And now we are looking for a wave 3. So like a 1, 2, 3, 4, 5, and so on. The issue here is that you can see that wave A here and wave B is extremely short in time. Wave B is crazy short in time compared to wave A. So it doesn't have the greatest fit. It's not breaking any rules or anything like that, but it's the proportions are off. And also here in wave 1, it's uncommon to have an extended wave 5. That's not the most common structure. The most common structure is an extended wave 3. So, yeah, but it is a valid count. And here we are looking at, let's see, this is the bearish. So we're going to move to this first. So this is, we just did that. This is a wave 1 here, and then A, B, and we have a wave C here. And then we have an impulse 1, 2, 3, 4, 5, and so on. So here is also a valid count, but same issue here is that wave 4 compared to wave 3 is very short in time. And also here, wave 1 and wave 2. So wave 2 is very shallow. It doesn't even reach the 50. So that is more a common target for a wave B than a wave 2. So it is a valid target, a valid count, I would say, but the proportions here are also a bit off. And this we went through. So this has a higher probability, I would say, because here we are counting this as a W, a zigzag. So 1, 2, 3, 4, 5, B, 1, 2, 3, 4, 5. So a zigzag, and then we have a triangle in wave X. Triangles in wave X are quite rare, but they do occur. And after the triangle, we are moving up here in wave E to finish wave X, and then we are looking for wave Y. And since the triangle hit the 70 fib, this has a higher chance of being a sideways correction, meaning that wave Y needs to be a flat or a triangle. And if wave X is a triangle, then it is extremely rare that wave Y also is a triangle, meaning that we are looking for a flat in wave Y. So wave Y can't be a zigzag in a sideways WXY. And also here we are looking for the same count, but we are looking for a zigzag down. So it isn't, as I mentioned before, that wave Y needs to be flat, but that is, the probabilities are higher if we touch the 70 for this to be a sideways correction, but it's not an invalidation. So here we are looking for WXY and a zigzag, so a double zigzag. But as I mentioned, it has very much lower probabilities than the triangle or the flat rather. So yeah, and this part counts better as an A, B, C. So that is why that has a higher probability than this count 1, 2, 3, 4, 5. But it's it's in the details, basically. So this also, if we are to count this as a finished correction, and we're now looking for higher prices, then we need to count these as a 1, 2, 1, 2, 1, 2. This is also a valid count, but if we take out this 135 price, then this count is basically not valid, because then the time is getting so much longer than it should be for a wave 1. So then we are very much looking for more consolidation, basically. So keep an eye on this level. If we hit it, then we know we are in for a longer consolidation. And yeah, that was basically it. So the count or the bias, the movement bias, is looking for more upside after a while of consolidation here. That was Securitas. I hope you have a great day. Thank you. Bye.